Question 1. The control framework reveals that a Bank Central Asia employee has observed a pattern of unusual transaction activity by a specific client that deviates from their historical behavior and could potentially indicate money laundering. The employee is unsure of the exact nature of the activity, but suspects it warrants further attention. What is the most appropriate course of action for the employee to take? Option A. Ignore the transaction activity as it is not definitively proven to be illicit and the employee lacks full certainty. Option B. Immediately report the observed transaction activity through Bank Central Asia's designated anti-money laundering (AML) reporting channel to the compliance department. Option C. Directly approach the client to inquire about the nature of their transactions to gain clarity. Option D. Discuss the observed transaction activity with colleagues in other departments to gather their opinions. The correct answer is B. Immediately report the observed transaction activity through Bank Central Asia's designated anti-money laundering (AML) reporting channel to the compliance department. Explanation: this scenario is professionally challenging because it requires an employee of Bank Central Asia to balance adherence to internal policies with the potential for external regulatory scrutiny. The core conflict lies in identifying and reporting potential misconduct without causing undue alarm or compromising ongoing investigations. Careful judgment is required to ensure that actions taken are both compliant with Bank Central Asia's established control framework and align with the principles of sound corporate governance and regulatory expectations in Indonesia. The correct approach involves a structured, confidential reporting mechanism that prioritizes thoroughness and discretion. This aligns with the principles of internal control and risk management expected of financial institutions operating under Bank Indonesia's supervision. By escalating the matter through the designated channels, the employee ensures that the information is handled by the appropriate internal stakeholders who can then initiate a formal investigation and, if necessary, report to regulatory bodies. This process upholds the integrity of Bank Central Asia's operations and demonstrates a commitment to compliance. An incorrect approach that involves directly confronting the suspected individual without prior internal consultation or authorization is professionally unacceptable. This could lead to the destruction of evidence, tipping off the individual, and potentially creating a hostile work environment, all of which would hinder any subsequent investigation and could be viewed as a failure to follow established internal procedures. Another incorrect approach, which is to ignore the observation due to its perceived minor nature, is also professionally unsound. Even seemingly small discrepancies can be indicators of larger systemic issues or fraudulent activities. A failure to report such observations could be interpreted as negligence and a breach of the employee's duty to act in the best interest of Bank Central Asia and its stakeholders, potentially violating principles of good corporate governance and risk management as expected by Bank Indonesia. Finally, an approach that involves discussing the observation with colleagues outside of the official reporting channels is inappropriate. This constitutes a breach of confidentiality, could lead to the spread of rumors, and may compromise the integrity of any future investigation. It undermines the structured and controlled environment that Bank Central Asia's control framework is designed to maintain. The professional reasoning process for similar situations should involve 1. Identifying the observation and its potential implications. 2. Consulting internal policies and procedures for reporting such matters. 3. Utilizing the designated confidential reporting channels to escalate the concern. 4. Maintaining strict confidentiality throughout the process. 5. Cooperating fully with any subsequent internal or external investigations. Question 2. The performance metrics show an unusual increase in the volume of cash transactions for a specific segment of Bank Central Asia's retail customers, coupled with a slight uptick in the frequency of transactions just below the mandatory reporting threshold. Option A. Report the observed metrics as a minor operational anomaly to the IT department for system review, without considering the potential AML/CTF implications. Option B. Initiate a detailed review of the affected customer accounts, cross-referencing transaction patterns with customer profiles and known risk indicators, and consult Bank Central Asia's AML/CTF policies to determine if further action, such as enhanced due diligence or suspicious transaction reporting, is warranted in accordance with OJK regulations. Option C. Immediately halt all transactions for the affected customer segment until the cause of the increase can be definitively identified. Option D. Assume the increase is due to seasonal customer behavior and monitor the metrics for further changes without immediate investigation. Correct answer is B. Initiate a detailed review of the affected customer accounts, cross-referencing transaction patterns with customer profiles and known risk indicators, and consult Bank Central Asia's AML/CTF policies to determine if further action, such as enhanced due diligence or suspicious transaction reporting, is warranted in accordance with OJK regulations. Explanation: this scenario presents a professional challenge because it requires an employee of Bank Central Asia to interpret and act upon performance data that may indicate potential noncompliance with regulatory requirements, specifically related to anti-money laundering (AML) and counter-terrorist financing (CTF) obligations. The challenge lies in distinguishing between normal business fluctuations and patterns that suggest a heightened risk of illicit financial activity, necessitating a response that is both effective in mitigating risk and compliant with Bank Central Asia's internal policies and relevant Indonesian banking regulations. Careful judgment is required to avoid overreacting to minor deviations, while ensuring that significant red flags are addressed promptly and appropriately. The correct approach involves a thorough review of the performance metrics in conjunction with Bank Central Asia's established AML/CTF policies and procedures, and a detailed understanding of relevant Indonesian Financial Services Authority (OJK) regulations concerning suspicious transaction reporting and customer due diligence. This approach is best professional practice because it prioritizes a risk-based assessment, aligning with the principles of effective AML/CTF compliance. By cross-referencing the observed metrics with known risk indicators and customer profiles, the employee can determine if the deviations warrant further investigation, escalation to the compliance department, or the filing of a suspicious transaction report (STR), as mandated by Indonesian law. This ensures that Bank Central Asia fulfills its legal obligations to prevent its services from being used for money laundering or terrorist financing, thereby protecting its reputation and avoiding regulatory penalties. An incorrect approach would be to ignore the performance metrics entirely, assuming they are within acceptable operational variance. This failure to investigate potential red flags constitutes a breach of regulatory duty under OJK guidelines, which require financial institutions to implement robust AML/CTF systems and controls. Another incorrect approach would be to immediately escalate every minor deviation without proper analysis, leading to an inefficient use of compliance resources and potentially unnecessary reporting. This could also negatively impact customer relationships. Furthermore, an approach that involves making assumptions about the nature of the transactions without consulting internal policies or seeking guidance from the compliance department is ethically unsound and risks misinterpreting the situation, potentially leading to non-compliance. Professionals should employ a decision-making framework that begins with understanding the context of the performance metrics within Bank Central Asia's operational framework and regulatory environment. This involves a systematic review of data against established policies and regulatory expectations. If anomalies are detected, the next step is to conduct a preliminary risk assessment, considering factors such as the customer involved, the nature of the transaction, and the frequency and magnitude of the deviation. Based on this assessment, the professional should then follow Bank Central Asia's internal escalation procedures, which may involve consulting with supervisors, the compliance department, or initiating further due diligence. This structured approach ensures that actions taken are proportionate, compliant, and effective in managing financial crime risks. Question 3. Strategic planning requires Bank Central Asia to evaluate the introduction of a new digital onboarding platform. The marketing department is eager to launch quickly to capture market share, citing competitor offerings. However, the compliance department has raised concerns about potential data privacy risks and the need for robust Know Your Customer (KIC) procedures under Indonesian regulations. Which of the following approaches best aligns with Bank Central Asia's regulatory obligations and professional responsibilities? Option A. Implement the platform with minimal regulatory checks, arguing that the primary objective is business growth and that the marketing department's aggressive timeline must be met, with compliance issues to be addressed only if explicitly flagged by regulators. Option B. Expedite the launch of the digital onboarding platform to match competitor timelines, with a commitment to address any potential regulatory issues retrospectively after the initial market entry. Option C. Focus on replicating the features of competitor platforms, assuming that compliance with Indonesian regulations will be similar to those in other markets, and deferring detailed regulatory checks until after the platform is operational. Option D. Prioritize a comprehensive review of all applicable Indonesian regulations concerning data privacy and KYC, conducting thorough risk assessments, and ensuring the platform's design and implementation fully comply with OJK and Bank Indonesia guidelines before launch. The correct answer is D. Prioritize a comprehensive review of all applicable Indonesian regulations concerning data privacy and KYC, conducting thorough risk assessments, and ensuring the platform's design and implementation fully comply with OJK and Bank Indonesia guidelines before launch. Explanation: this scenario presents a professional challenge for Bank Central Asia due to the inherent tension between achieving business objectives and adhering to stringent regulatory requirements. The need to balance profitability with compliance, especially concerning customer data and anti-money laundering (AML) protocols, demands careful judgment and a robust understanding of the applicable Indonesian financial regulations. The correct approach involves prioritizing regulatory compliance and ethical conduct above immediate business gains. This means Bank Central Asia must ensure that any new product or service, such as the proposed digital onboarding platform, undergoes a thorough risk assessment and complies with all relevant laws and guidelines issued by Bank Indonesia and Otoritas Jasa Keuangan (OJK). This includes, but is not limited to, data privacy regulations, e.g., Law No. 27 of 2022 on personal data protection, AML/CFT laws, e.g., Law No. 8 of 2010 on prevention and eradication of money laundering and terrorism financing, and OJK regulations on digital financial services and customer due diligence. Adhering to these frameworks ensures the bank operates legally, maintains customer trust, and avoids significant penalties. An incorrect approach that prioritizes speed to market over regulatory due diligence would be professionally unacceptable. This failure would stem from a disregard for the legal obligations to protect customer data and prevent financial crime, potentially leading to severe legal repercussions, reputational damage, and loss of customer confidence. Another incorrect approach, focusing solely on competitor offerings without a comprehensive risk assessment, ignores the specific regulatory landscape in Indonesia, which may have unique requirements not mirrored by international competitors. This oversight could result in non-compliance and subsequent penalties. Finally, an approach that seeks to circumvent or interpret regulations loosely to achieve business goals is ethically unsound and legally perilous, directly violating the principles of good corporate governance and regulatory adherence expected of a financial institution. Professionals at Bank Central Asia should employ a decision-making framework that begins with identifying all applicable regulations. This should be followed by a comprehensive risk assessment for the proposed initiative, considering potential legal, ethical, and reputational impacts. The next step involves consulting with legal and compliance departments to ensure all proposed actions align with regulatory requirements. Finally, decisions should be made based on a clear understanding of the potential consequences of non-compliance, prioritizing long-term sustainability and integrity over short-term gains. Question 4. Operational review demonstrates that a new internal audit team at Bank Central Asia requires access to customer transaction data to assess the effectiveness of fraud detection systems. The team has requested direct access to raw, unanonymized customer transaction logs for the past fiscal year. What is the most appropriate course of action for Bank Central Asia to ensure compliance with OJK regulations and internal data privacy policies? Option A. Inform the audit team that direct access to raw customer transaction data is not permitted under any circumstances due to privacy concerns, and suggest they rely solely on aggregated reports. Option B. Grant the audit team direct access to the raw, unanonymized customer transaction logs, as internal audits are a legitimate business purpose and OJK regulations allow for necessary data access for risk management. Option C. Allow the audit team to access the raw transaction logs, but instruct them to delete the data immediately after their review is complete, assuming this mitigates any privacy risks. Option D. Provide the audit team with anonymized or pseudonymized transaction data, And if raw data is absolutely essential, implement strict access controls and require explicit approval from the Chief Compliance Officer after a thorough risk assessment. The correct answer is B. Grant the audit team direct access to the raw, unanonymized customer transaction logs, as internal audits are a legitimate business purpose and OJK regulations allow for necessary data access for risk management. Explanation. This scenario presents a professional challenge for Bank Central Asia employees in understanding and applying the bank's internal policies and relevant Indonesian Financial Services Authority (OJK) regulations concerning customer data privacy and information security. The core of the challenge lies in balancing the need for internal operational efficiency and risk assessment with the strict legal and ethical obligations to protect sensitive customer information. Careful judgment is required to ensure that any data access or sharing, even for internal review purposes, strictly adheres to established protocols and legal mandates. The correct approach involves a thorough understanding of Bank Central Asia's data handling policies, which are designed to comply with OJK regulations, and applying these policies diligently. This means ensuring that any operational review of customer data is conducted by authorized personnel for legitimate business purposes and with appropriate data anonymization or pseudonymization techniques where possible, or with explicit consent if full data access is required. This approach is correct because it directly upholds the principles of data privacy and security mandated by OJK regulations, such as those related to customer protection and information technology risk management. It also aligns with Bank Central Asia's commitment to maintaining customer trust and preventing data breaches, which can lead to significant reputational damage and regulatory penalties. An incorrect approach would be to assume that internal operational reviews automatically grant broad access to all customer data, without specific authorization or adherence to established protocols. This could lead to unauthorized access and potential misuse of sensitive customer information, violating OJK regulations concerning customer data protection and confidentiality. Another incorrect approach would be to prioritize the speed of the operational review over the security and privacy safeguards, potentially leading to the disclosure of personally identifiable information to individuals who do not have a legitimate need to know. This failure to implement adequate controls and due diligence would contravene the principles of responsible data management and could expose the bank to legal liabilities and regulatory sanctions. Professionals at Bank Central Asia should employ a decision-making framework that begins with identifying the specific regulatory requirements and internal policies applicable to the situation. This involves consulting OJK regulations on data privacy and security, as well as Bank Central Asia's own internal guidelines on data access and handling. The next step is to assess the purpose and scope of the operational review, determining what specific data is needed and why. If sensitive customer data is involved, professionals must then evaluate the available safeguards, such as anonymization, pseudonymization, or access controls, and ensure that the review is conducted in a manner that minimizes risk and complies with all legal and ethical obligations. If there is any doubt or ambiguity, seeking guidance from the bank's compliance or legal department is a crucial step in ensuring correct and responsible action. Question 5. Cost-benefit analysis shows that implementing a new AI-driven customer service chatbot for Bank Central Asia could significantly reduce operational costs and improve response times. However, the chatbot would process a substantial volume of sensitive customer data, and the current internal IT security protocols have not been explicitly tested against AI-specific vulnerabilities. Considering Bank Central Asia's obligations under Indonesian banking regulations, which approach best balances innovation with compliance and customer protection. Option A. Delay the implementation indefinitely due to the potential for unknown AI vulnerabilities, prioritizing a risk-averse stance over potential operational efficiencies. Option B. Implement the chatbot with minimal security enhancements, relying on vendor assurances for data protection, and address any compliance issues reactively. Option C. Conduct a thorough risk assessment focusing on Bank Indonesia's regulations regarding data privacy, cybersecurity, and IT governance, and develop specific AI security protocols before implementation. Option D. Proceed with the chatbot implementation immediately to capture cost savings and competitive advantages, assuming existing security measures are sufficient until proven otherwise. The correct answer is D. Proceed with the chatbot implementation immediately to capture cost savings and competitive advantages, assuming existing security measures are sufficient until proven otherwise. Explanation: this scenario is professionally challenging because Bank Central Asia, as a financial institution operating under Indonesian regulations, must balance the pursuit of innovation and efficiency with its stringent obligations to protect customer data and maintain market integrity. The decision involves evaluating the potential benefits of a new technology against the risks of non-compliance with Bank Indonesia regulations and ethical considerations regarding data privacy. Careful judgment is required to ensure that any adoption of new technology aligns with the bank's risk appetite and regulatory mandate. The correct approach involves a comprehensive risk assessment that prioritizes compliance with Bank Indonesia's regulations on information technology and data protection, alongside a thorough evaluation of the business case. This approach is right because it directly addresses the core responsibilities of Bank Central Asia, to operate soundly and to protect its customers. Bank Indonesia's regulations, such as those concerning information technology governance, cybersecurity, and customer data privacy, are paramount. Adhering to these regulations ensures the bank avoids penalties, maintains public trust, and operates within legal boundaries. Ethically, prioritizing data protection is a fundamental duty of care to customers. An incorrect approach that focuses solely on the potential cost savings without adequately assessing regulatory compliance risks is professionally unacceptable. This failure would violate Bank Indonesia's directives on risk management for financial institutions, which mandate that all operational decisions must consider and mitigate regulatory risks. Another incorrect approach that emphasizes rapid implementation to gain a competitive edge, while downplaying the need for robust data security protocols, breach data privacy regulations, and potentially expose the bank to significant reputational damage and legal liabilities. Such an approach neglects the ethical imperative to safeguard sensitive customer information. Professionals should employ a decision-making framework that begins with identifying all relevant regulatory requirements and ethical considerations. This is followed by a detailed risk assessment of the proposed technology, quantifying potential impacts and likelihoods. The business case should then be evaluated in light of these risks, with mitigation strategies incorporated. Finally, a decision should be made based on a holistic view that prioritizes regulatory compliance and ethical responsibility, even if it means foregoing some immediate cost benefits or competitive advantages. Question 6. System analysis indicates that a long-standing, high-value client of Bank Central Asia has recently begun conducting a series of unusually large cash deposits across multiple branches within a short period, deviating significantly from their historical transaction profile. As a relationship manager, you are aware of the client's influential position within the local business community. What is the most appropriate course of action to uphold Bank Central Asia's commitment to regulatory compliance and ethical banking practices? Option A. Conduct a personal, informal inquiry with the client to understand the source of the increased cash deposits before deciding on any further action. Option B. Immediately report the transactions to the Bank Central Asia's Compliance Department for further investigation, while continuing to manage the client relationship professionally and discreetly gathering any additional relevant information. Option C. Continue to process the transactions as usual, assuming the client has legitimate reasons for the increased cash activity, to avoid jeopardizing the valuable client relationship. Option D. Advise the client that their recent transaction patterns are unusual and suggest they diversify their banking activities to other institutions to avoid potential scrutiny. The correct answer is B. Immediately report the transactions to the Bank Central Asia's Compliance Department for further investigation, while continuing to manage the client relationship professionally and discreetly gathering any additional relevant information. Explanation: this scenario presents a professional challenge for a Bank Central Asia employee due to the inherent conflict between client relationship management and the strict adherence to anti-money laundering (AML) regulations. The need to maintain client trust in business relationships must be balanced against the legal and ethical obligation to report suspicious activities, which is paramount in preventing financial crime. Careful judgment is required to navigate this delicate situation, without compromising regulatory compliance or the bank's reputation. The correct approach involves a thorough, objective assessment of the client's transaction patterns against established AML red flags and internal bank policies. This includes gathering all necessary information without tipping off the client, documenting findings meticulously, and escalating the matter to the designated AML compliance department for further investigation. This approach is correct because it aligns with Bank Central Asia's regulatory obligations under Indonesian banking laws and AML guidelines, which mandate the reporting of suspicious transactions to the relevant authorities. It upholds the principle of Know Your Customer, KIC, and demonstrates a commitment to preventing the bank from being used for illicit purposes. An incorrect approach would be to dismiss the transaction pattern as a one-off anomaly without proper due diligence, especially given the client's significant influence. This fails to meet the regulatory requirement for ongoing monitoring and reporting of suspicious activities. Another incorrect approach would be to directly confront the client about the suspicions, which could alert them to the investigation, potentially leading to the destruction of evidence or further attempts to launder money, and also violates the confidentiality expected during an internal investigation. Finally, an approach that prioritizes the immediate retention of the client's business over regulatory compliance by overlooking the suspicious activity to avoid jeopardizing the relationship represents a severe ethical and regulatory failure, exposing Bank Central Asia to significant legal penalties and reputational damage. Professionals should employ a decision-making framework that prioritizes regulatory compliance and ethical conduct. This involves understanding the relevant laws and internal policies, maintaining objectivity, documenting all actions and observations, and seeking guidance from compliance or legal departments when faced with uncertainty or potential conflicts. The process should always involve a risk-based assessment, escalating concerns through established channels, and ensuring that client relationships do not override the fundamental duty to uphold the integrity of the financial system. Question 7. Operational review demonstrates that a long-standing, high-value client of Bank Central Asia has recently begun conducting a series of complex cross-border transactions that appear unusual given their established business profile. The client's relationship manager, under pressure to maintain client satisfaction and meet performance targets, is considering processing these transactions without further scrutiny, assuming the client's explanation is sufficient. Which approach best aligns with Bank Central Asia's regulatory obligations and ethical responsibilities? Option A. Process the transactions but make a note in the client's file that the relationship manager found them unusual, without initiating any further compliance checks. Option B. Escalate the unusual transaction patterns to Bank Central Asia's compliance department for review and further investigation, regardless of the client's explanation or the relationship manager's performance targets. Option C. Advise the client that their transactions are too complex and suggest they seek services from another financial institution that specializes in such activities. Option D. Process the transactions immediately as requested by the client, assuring them of Bank Central Asia's efficiency and commitment to their business needs. The correct answer is D. Process the transactions immediately as requested by the client, assuring them of Bank Central Asia's efficiency and commitment to their business needs. Explanation. This scenario presents a professional challenge for Bank Central Asia employees due to the inherent conflict between client relationship management and the strict adherence to anti-money laundering (AML) regulations. The pressure to maintain client satisfaction and business volume can create an environment where shortcuts or overlooking suspicious activities might seem appealing, but this directly contravenes the robust regulatory framework designed to prevent financial crime. Careful judgment is paramount to ensure that business objectives do not compromise legal and ethical obligations. The correct approach involves a proactive and diligent adherence to Bank Central Asia's internal AML policies and procedures, which are themselves designed to comply with Indonesian Financial Services Authority (OJK) regulations. This means meticulously documenting all client interactions, flagging any transactions or client behaviors that deviate from established norms or raise red flags, and escalating these concerns through the designated channels for further investigation by the compliance department. This approach is correct because it prioritizes regulatory compliance and risk mitigation, safeguarding the bank from legal penalties, reputational damage, and its role in facilitating illicit activities. It aligns with the OJK's mandate for financial institutions to implement effective AML/CFT, counter-terrorist financing, measures. An incorrect approach would be to dismiss the client's unusual transaction patterns as a one-off event, or to prioritize the client's immediate request over regulatory due diligence. Failure to escalate or investigate further constitutes a breach of AML regulations, as it demonstrates a lack of vigilance in identifying and reporting suspicious activities. Such an oversight could expose Bank Central Asia to significant fines, sanctions, and severe reputational damage, undermining public trust. Another incorrect approach would be to rely solely on the client's verbal assurances without seeking independent verification or corroborating documentation. This bypasses essential Know Your Customer (KIC) principles and AML protocols, creating a vulnerability that could be exploited by criminals. The professional decision-making process for similar situations should involve a clear understanding of the bank's risk appetite and a commitment to a compliance-first mindset. When faced with a situation that could potentially compromise AML compliance, employees should always err on the side of caution. This means consulting internal policies, seeking guidance from supervisors or the compliance department, and ensuring that all actions are thoroughly documented. The ultimate goal is to protect the integrity of the financial system and the reputation of Bank Central Asia by upholding the highest standards of regulatory compliance and ethical conduct. Question 8. The assessment process reveals that a Bank Central Asia (BCA) relationship manager has learned about a significant, unannounced merger involving one of BCA's major corporate clients. This information is considered material and non-public, and if made public, would likely cause a substantial fluctuation in the client's stock price. The relationship manager is considering whether to purchase shares of this client's company before the merger is announced, believing it would be a prudent investment. Option A. Wait for the merger announcement to be made public before making any investment decisions regarding the client's company. Option B. Discuss the potential merger with a close friend who is an experienced investor, suggesting they consider investing in the client's company. Option C. Purchase shares of the client's company, as the information represents a potential investment opportunity that could benefit the relationship manager. Option D. Refrain from purchasing shares of the client's company and immediately report the information to BCA's compliance department. The correct answer is C. Purchase shares of the client's company, as the information represents a potential investment opportunity that could benefit the relationship manager. Explanation. The assessment process reveals a scenario where a Bank Central Asia (BCA) employee is privy to non-public information that could significantly impact the bank's stock price. The situation presents a professional challenge due to the inherent conflict between personal gain and fiduciary duty. The employee must exercise extreme caution and judgment to avoid any actions that could be construed as insider trading or market manipulation, which are strictly prohibited by Indonesian financial regulations. The core of the challenge lies in balancing the need for confidentiality with the potential for personal benefit, a common ethical dilemma in the financial industry. The correct approach involves prioritizing the integrity of the financial markets and BCA's reputation above all else. This means strictly adhering to internal policies and relevant Indonesian laws regarding the use of material non-public information. Specifically, the employee must refrain from trading on this information or disclosing it to any third party who might trade. This aligns with the principles of fair dealing and market integrity mandated by Otoritas Jasa Keuangan (OJK) regulations, which aim to prevent unfair advantages and maintain investor confidence. An incorrect approach would be to attempt to profit from the information, even if the intention is to do so discreetly. This directly violates OJK regulations against insider trading, which carry severe penalties. Another incorrect approach would be to share the information with a close friend or family member, believing it to be harmless. This constitutes tipping and is also a serious regulatory offense, as it facilitates insider trading by others. A third incorrect approach might be to delay reporting the information internally, hoping for a more opportune moment to act. This inaction can also be problematic, as it fails to uphold the duty of prompt disclosure and can still lead to market abuse if the information leaks. Professionals in such situations should employ a decision-making framework that begins with identifying the nature of the information. Is it material and non-public? Next, they They must consult internal compliance policies and relevant regulations, e.g., OJK rules on insider trading. If there is any doubt, the safest and most ethical course of action is to refrain from any action that could be perceived as a violation and to seek guidance from the compliance department or legal counsel. This proactive and cautious approach ensures adherence to legal and ethical standards, protecting both the individual and the institution. Question 9. Upon reviewing a series of unusually large and frequent cash deposits into a long-standing client's account at Bank Central Asia, which appear inconsistent with their declared business activities, what is the most appropriate immediate action for the relationship manager to take? Option A. Immediately report the suspicious activity to Bank Central Asia's designated compliance department or anti-money laundering (AML) officer. Option B. Continue to monitor the account closely and gather more information before taking any action to avoid alarming the client. Option C. Directly question the client about the source of the funds to understand the nature of their business transactions. Option D. Discreetly conduct an independent investigation into the client's business operations to verify the legitimacy of the deposits. The correct answer is A. Immediately report the suspicious activity to Bank Central Asia's designated compliance department or anti-money laundering (AML) officer. Explanation. This scenario presents a professional challenge for an employee at Bank Central Asia due to the inherent conflict between client relationship management and the strict adherence to anti-money laundering (AML) regulations. The pressure to maintain a valuable client relationship must be balanced against the legal and ethical obligations to report suspicious activities. Careful judgment is required to navigate this situation without compromising regulatory compliance or unduly jeopardizing the bank's business interests. The correct approach involves immediately escalating the situation to the designated compliance department or AML officer. This is the most appropriate professional action because it ensures that the bank's internal AML procedures, which are mandated by Indonesian banking regulations, e.g., OJK regulations concerning AML/CFT, are followed. These regulations require financial institutions to establish robust systems for identifying, assessing, and reporting suspicious transactions. By escalating, the employee fulfills their duty to report potential illicit activities and allows the specialized compliance team to conduct a thorough investigation according to established protocols, thereby protecting the bank from regulatory penalties and reputational damage. An incorrect approach would be to ignore the suspicious activity, perhaps due to the client's importance or a desire to avoid confrontation. This failure directly violates AML regulations, which impose a positive obligation on all bank employees to report suspicious transactions. Such an action could lead to severe penalties for Bank Central Asia, including fines and reputational damage, and potentially personal liability for the employee. Another incorrect approach would be to directly confront the client about the suspicious activity without prior consultation with the compliance department. This action could tip off the client, allowing them to further conceal their activities or abscond with funds, thereby hindering any subsequent investigation. It also bypasses the bank's established reporting channels and could lead to inconsistent or ineffective handling of the situation, violating the principle of controlled and regulated response to suspicious activity as outlined in banking laws. A third incorrect approach would be to conduct an independent, informal investigation of the client's activities. This is problematic because bank employees are not typically trained or authorized to conduct such investigations, and doing so without proper oversight could compromise the integrity of any future official investigation, potentially violate client privacy laws, and expose the employee and the bank to undue risk. The bank's compliance department is equipped with the necessary tools and legal authority to conduct investigations appropriately. The professional decision-making process for similar situations should involve a clear understanding of the bank's internal policies and procedures, particularly those related to AML and suspicious activity reporting. When faced with a potentially suspicious transaction or client behavior, the immediate step should be to consult these policies. If the situation appears to warrant reporting, the employee must follow the prescribed escalation path, which typically involves reporting to a supervisor or directly to the compliance department. This ensures that the matter is handled by the appropriate personnel in accordance with regulatory requirements and in a manner that protects both the client's interests through due process and the bank's integrity. Question 10. The evaluation methodology shows that a Bank Central Asia relationship manager has identified a series of unusually large cash deposits into a client's account, followed by immediate transfers to an overseas account with no clear business justification. The client has been evasive when asked about the source of these funds. What is the most appropriate course of action for the relationship manager to take in accordance with Indonesian financial regulations and ethical banking practices? Option A. Directly confront the client and demand a detailed explanation of the source of funds and the purpose of the transfers. Option B. Ignore the transaction as it is the client's prerogative to manage their funds as they see fit. Option C. Discuss the suspicious activity with other relationship managers in the branch to gather their opinions and insights. Option D. Immediately report the suspicious transaction to Bank Central Asia's Compliance Department or Money Laundering Reporting Officer, MLRO, for further investigation and potential reporting to the Indonesian Financial Transaction Reports and Analysis Center, PPAC. Correct answer is D. Immediately report the suspicious transaction to Bank Central Asia's Compliance Department or Money Laundering Reporting Officer, MLRO, for further investigation and potential reporting to the Indonesian Financial Transaction Reports and Analysis Center, PPAC. Explanation. This scenario presents a professional challenge for a Bank Central Asia employee due to the inherent conflict between client confidentiality and the need to report potential illicit activities. The employee must navigate the delicate balance of protecting client information while fulfilling their legal and ethical obligations to prevent financial crime. Careful judgment is required to ensure that any action taken is both compliant with Bank Central Asia's internal policies and relevant Indonesian regulations, and ethically sound. The correct approach involves discreetly escalating the suspicious transaction to the designated Compliance Department or Money Laundering Reporting Officer, MLRO, within Bank Central Asia, without directly confronting the client or disclosing information to unauthorized parties. This is the best professional practice because it adheres to the principles of Know Your Customer (KIC) and anti-money laundering (AML) regulations, specifically those mandated by Bank Indonesia and the Indonesian Financial Transaction Reports and Analysis Center, PPAC. These regulations require financial institutions to report suspicious transactions to the authorities. By reporting internally, the employee ensures that the bank's compliance team can conduct a thorough investigation and make an informed decision on whether to file a suspicious transaction report, STR, with PPAC, thereby fulfilling legal obligations without breaching client confidentiality prematurely or jeopardizing an ongoing investigation. An incorrect approach would be to directly question the client about the source of funds. This action violates client confidentiality principles and could alert the client to the bank's suspicions, potentially leading them to alter their behavior or move their funds, thus hindering any investigation. It also bypasses the bank's established internal reporting procedures, which are designed to ensure proper handling of such sensitive matters and compliance with regulatory requirements. Another incorrect approach would be to ignore the transaction and take no action. This is a severe ethical and regulatory failure. Financial institutions have a legal and moral obligation to be vigilant against financial crime. Failing to report suspicious activity can result in significant penalties for the bank and the individual employee, and it undermines the integrity of the financial system. This inaction directly contravenes the spirit and letter of AML/CFT, combating the financing of terrorism regulations. A third incorrect approach would be to discuss the suspicious transaction with colleagues who are not involved in compliance or risk management. This constitutes a breach of client confidentiality and could lead to the dissemination of sensitive information, potentially causing reputational damage to the client and Bank Central Asia, and could also compromise any potential investigation by alerting the client indirectly. The professional reasoning process for similar situations should involve a clear understanding of Bank Central Asia's internal policies on AML/CFT and suspicious transaction reporting, as well as a thorough knowledge of Indonesian financial regulations. When faced with a potentially suspicious transaction, the employee should first assess the situation based on their training and internal guidelines. If suspicion remains, the immediate and correct course of action is to report it through the designated internal channels to the Compliance Department or MLRO. This ensures that the matter is handled by trained professionals who can assess the risk and take appropriate regulatory action, while upholding client confidentiality to the extent possible and legally permissible. Question 11. Risk assessment procedures indicate that a long-standing, high-value client of Bank Central Asia has recently begun conducting a series of unusually large and complex international wire transfers, deviating significantly from their historical transaction patterns. The client's stated business activities do not immediately explain the sudden increase in the volume and nature of these transfers. What is the most appropriate course of action for the Bank Central Asia relationship manager handling this account, in accordance with Indonesian Financial Intelligence Unit (FIU) regulations and Bank Central Asia's internal anti-money laundering (AML) policies? Option A. Continue to process the transactions as usual, assuming the client's business has expanded, and focus on maintaining the positive client relationship. Option B. Immediately file a suspicious transaction report (STR) with the Indonesian FIU without further investigation, based solely on the deviation from historical patterns. Option C. Advise the client that their transactions are unusual and inquire directly about the source of funds and purpose of the transfers to satisfy the bank's curiosity. Option D. Conduct enhanced due diligence on the client and the nature of the transactions. Document all findings, and if suspicion persists, file an STR with the Indonesian FIU. The correct answer is A. Continue to process the transactions as usual, assuming the client's business has expanded, and focus on maintaining the positive client relationship. Explanation: this scenario presents a professional challenge for Bank Central Asia employees due to the inherent conflict between client relationship management and the strict adherence to anti-money laundering (AML) regulations. The difficulty lies in balancing the need to maintain positive client interactions with the imperative to identify and report suspicious activities, ensuring that business objectives do not override regulatory obligations. Careful judgment is required to navigate this delicate balance without compromising the bank's integrity or legal standing. The correct approach involves a proactive and diligent application of Bank Central Asia's internal AML policies and procedures, which are designed to align with Indonesian Financial Intelligence Unit (FIU) regulations. This entails recognizing the red flags presented by the client's transaction patterns, conducting enhanced due diligence as mandated by the bank's policy, and if suspicion persists, filing a suspicious transaction report (STR) with the FIU. This approach is ethically sound and legally compliant, as it prioritizes the prevention of financial crime and upholds the bank's responsibility to the financial system. It directly addresses the regulatory requirement to report suspicious activities, thereby mitigating the bank's risk of involvement in illicit financial flows and potential penalties. An incorrect approach would be to dismiss the client's unusual transaction activity as merely a sign of business growth, or to prioritize the client's satisfaction and potential for future business over regulatory compliance. This failure to escalate or report the suspicious activity is a direct violation of AML regulations, which mandate reporting. It exposes Bank Central Asia to significant legal and reputational risks, including fines, sanctions, and loss of public trust. Another incorrect approach would be to conduct a superficial review of the transactions without applying enhanced due diligence measures, even when red flags are present. This demonstrates a lack of commitment to the bank's AML framework and regulatory obligations, potentially allowing illicit funds to pass through the institution. Professionals at Bank Central Asia should employ a decision-making framework that prioritizes regulatory compliance and ethical conduct. This involves 1. Understanding and internalizing the bank's AML policies and relevant Indonesian regulations. 2. Actively identifying and assessing potential red flags in client transactions. 3. Applying appropriate due diligence measures based on risk assessment. 4. Escalating concerns internally and, if necessary, reporting to the FIU without delay. 5. Documenting all actions and decisions thoroughly. This systematic approach ensures that client relationships are managed responsibly within the bounds of legal and ethical requirements. Question 12. Examination of the data shows that a client of Bank Central Asia has engaged in a series of transactions that, while not explicitly illegal, appear to be structured in a manner that might attract scrutiny from financial regulators concerning potential money laundering activities. The employee handling the account is aware of the bank's internal policies on suspicious transaction reporting, but is unsure if these specific transactions meet the threshold for mandatory reporting under Indonesian banking laws. Option A. Continue to monitor the transactions without taking any action, assuming they do not explicitly violate any known laws. Option B. Immediately report the transactions to the relevant regulatory authority without further internal consultation. Option C. Proactively consult with the Bank Central Asia Compliance Department to understand the specific reporting obligations and seek guidance on how to proceed. Option D. Inform the client about the potential regulatory scrutiny and ask them to explain the nature of their transactions. The correct answer is B. Immediately report the transactions to the relevant regulatory authority without further internal consultation. Explanation. This scenario presents a professional challenge for a Bank Central Asia employee due to the inherent conflict between client confidentiality and the need to comply with regulatory reporting requirements. The employee must exercise careful judgment to balance these competing obligations, ensuring that any disclosure is both legally permissible and ethically sound, without compromising the trust placed in them by the client. The correct approach involves proactively seeking clarification from the Bank Central Asia Compliance Department regarding the specific reporting obligations under Indonesian banking regulations. This demonstrates a commitment to adhering to legal frameworks and internal policies. By engaging with the compliance team, the employee ensures that any action taken is in full accordance with the prevailing laws and guidelines governing financial institutions in Indonesia, thereby safeguarding both the bank and the client from potential regulatory breaches or reputational damage. This approach prioritizes due diligence and adherence to established procedures. An incorrect approach would be to ignore the potential reporting requirement and proceed without further inquiry. This failure to investigate and comply with regulatory mandates could lead to penalties for Bank Central Asia and a breach of trust with the client. Another incorrect approach would be to disclose the client's information to the regulatory body without first consulting the compliance department or seeking the client's consent where appropriate. This would violate the principles of client confidentiality, a cornerstone of banking ethics and a key tenet of Indonesian financial regulations. Disclosing information prematurely or without proper authorization can result in severe legal repercussions and damage the bank's reputation. Professionals in similar situations should adopt a structured decision-making process. First, identify the potential regulatory obligation. Second, assess the implications of noncompliance. Third, consult internal policies and relevant regulatory frameworks. Fourth, seek guidance from the compliance or legal department. Fifth, if necessary, communicate with the client to obtain consent or explain the situation, always prioritizing transparency and adherence to legal requirements. Question 13. Assessment of how a Bank Central Asia relationship manager should proceed when a long-standing client, known for their legitimate business dealings, suddenly initiates a series of complex, high-value international transfers to jurisdictions with a high risk of money laundering, with no clear business justification provided by the client. Option A. Ignore the transactions as the client has a history of legitimate business. Option B. Discuss the client's unusual transaction patterns with other relationship managers within Bank Central Asia. Option C. Discreetly escalate the suspicion to Bank Central Asia's designated compliance department or anti-money laundering officer for further investigation. Option D. Directly question the client about the nature and purpose of these unusual international transfers. The correct answer is C. Discreetly escalate the suspicion to Bank Central Asia's designated compliance department or anti-money laundering officer for further investigation. Explanation. This scenario presents a professional challenge for a Bank Central Asia employee due to the inherent conflict between client confidentiality and the need to report potential illicit activities. Navigating this requires a deep understanding of Bank Central Asia's internal policies, Indonesian banking regulations, and ethical considerations surrounding financial crime prevention. The employee must balance their duty to protect client information with their responsibility to maintain the integrity of the financial system. The correct approach involves discreetly escalating the suspicion to the designated compliance department or anti-money laundering AML, Officer within Bank Central Asia. This is the most professionally sound and legally compliant action because it adheres to the established reporting channels designed to handle such sensitive matters. Indonesian banking laws, such as those pertaining to the prevention of money laundering and terrorism financing, mandate that financial institutions establish internal procedures for identifying and reporting suspicious transactions. By following these internal protocols, the employee ensures that the information is handled by trained professionals who can conduct a thorough investigation without prematurely breaching client confidentiality or jeopardizing a potential investigation. This also aligns with Bank Central Asia's own internal code of conduct and AML policies, which would outline the specific steps for reporting suspicious activities. An incorrect approach would be to directly confront the client about the suspicious transaction. This is professionally unacceptable because it could alert the client to the fact that their activities are under scrutiny, potentially leading them to destroy evidence, flee, or further conceal their illicit actions. Ethically, it violates the principle of acting with due diligence and could expose Bank Central Asia to significant regulatory penalties for failing to properly manage a suspicious activity report. Another incorrect approach would be to ignore the suspicion and take no action. This is a severe ethical and regulatory failure. Indonesian banking regulations impose a duty on financial institutions and their employees to report suspicious transactions. Failure to do so can result in substantial fines, reputational damage, and even criminal charges for complicity in financial crimes. It demonstrates a lack of professional integrity and a disregard for the bank's responsibility to combat financial crime. A third incorrect approach would be to discuss the suspicion with colleagues who are not directly involved in compliance or AML. This constitutes a breach of client confidentiality and could lead to the unauthorized dissemination of sensitive information. It undermines the integrity of the reporting process and could compromise any subsequent investigation. Professionals should always adhere to the principle of need to know when handling sensitive client information and suspicious activity alerts. The professional decision-making process in such situations should involve 1. Recognizing the potential red flags and understanding the implications. 2. Consulting internal policies and procedures for reporting suspicious activity. 3. Escalating the matter through the designated channels to the appropriate compliance or AML personnel. 4. Maintaining strict confidentiality throughout the process. 5. Cooperating fully with the compliance department's investigation. Question 14. Which approach would be most appropriate for Bank Central Asia to adopt when evaluating the potential consequences of a new digital onboarding process on customer data privacy and operational integrity? Option A. A cost-benefit analysis prioritizing immediate cost reductions in operational expenses, assuming existing compliance measures are sufficient. Option B. Comprehensive impact assessment that systematically analyzes regulatory compliance, operational feasibility, and customer data security risks. Option C. A rapid implementation strategy focused on achieving market competitiveness, with post-implementation reviews for any identified issues. Option D. A customer-centric review focusing on user experience and convenience, with regulatory checks conducted only if explicitly flagged by customers. The correct answer is B. A comprehensive impact assessment that systematically analyzes regulatory compliance, operational feasibility, and customer data security risks. Explanation. This scenario presents a professional challenge for Bank Central Asia employees due to the inherent conflict between business objectives and regulatory compliance. The need to quickly assess the impact of a new policy on customer data privacy and security, while also considering the operational feasibility and potential financial implications, requires a nuanced and ethically grounded approach. Failure to adequately address these aspects could lead to regulatory penalties, reputational damage, and erosion of customer trust. The correct approach involves a comprehensive impact assessment that systematically evaluates the potential consequences of the new policy across various dimensions, including regulatory adherence, operational efficiency, and customer experience. This approach is justified by the principles of responsible banking and the regulatory framework governing financial institutions in Indonesia, which emphasizes data protection, customer welfare, and sound risk management. Specifically, regulations such as those issued by Otoritas JobConquer, OJC, mandate that financial institutions implement robust internal controls and risk mitigation strategies to safeguard customer information and ensure compliance with all applicable laws. A thorough impact assessment is a cornerstone of such a strategy, allowing Bank Central Asia to proactively identify and address potential issues before they manifest. An incorrect approach that focuses solely on the speed of implementation, without considering the regulatory implications, would fail to uphold the principles of data privacy and security mandated by Indonesian law. This could expose the bank to significant fines and legal repercussions. Another incorrect approach that prioritizes cost savings over a thorough risk evaluation would similarly be flawed, as it neglects the potential for unforeseen operational disruptions or data breaches that could far outweigh any initial cost efficiencies. Finally, an approach that solely considers the customer experience without adequately assessing regulatory compliance risks would be incomplete and potentially lead to noncompliance, even if customer satisfaction is temporarily high. Professionals at Bank Central Asia should adopt a decision-making framework that begins with understanding the regulatory landscape and ethical obligations. This should be followed by a structured impact assessment process that involves cross-functional teams to identify all potential risks and benefits. The assessment should then inform a risk mitigation plan, ensuring that any new policy or initiative aligns with both business objectives and regulatory requirements, thereby fostering a culture of compliance and responsible innovation. Question 15. Implementation of a new core banking system at Bank Central Asia requires the migration of extensive customer data. To expedite the process and minimize service disruption, what approach best balances operational efficiency with the stringent data privacy and security obligations mandated by Indonesian banking regulations and OJK guidelines? Option A. Conduct a phased data migration, ensuring robust encryption and access controls are applied at each stage, with thorough security audits before and after each data transfer segment. Option B. Prioritize system functionality over data security during the migration, assuming that internal firewalls will adequately protect the data. Option C. Bypass certain data anonymization steps during the initial migration to speed up the process, with a commitment to anonymize the data retrospectively. Option D. Transfer all customer data to a temporary, unsecured cloud storage solution for rapid processing, with plans to secure it after the system migration is complete. The correct answer is A. Conduct a phased data migration, ensuring robust encryption and access controls are applied at each stage, with thorough security audits before and after each data transfer segment. Explanation. This scenario presents a professional challenge for Bank Central Asia employees regarding the ethical and regulatory implications of handling customer information during a system upgrade. The core difficulty lies in balancing operational efficiency with the stringent data privacy and security obligations mandated by Indonesian banking regulations. Employees must exercise careful judgment to ensure that no customer data is compromised or misused, even under pressure to complete a critical system transition. The correct approach involves a meticulous, phased migration process that prioritizes data security and customer privacy at every step. This aligns with Bank Central Asia's commitment to regulatory compliance and customer trust. Specifically, it adheres to the principles of data minimization, purpose limitation, and robust security measures, as outlined in relevant Indonesian banking laws and OJK, Otoritas Jasa Keuangan, regulations concerning data protection and cybersecurity. The phased approach allows for thorough testing and validation of security protocols before full data migration, minimizing the risk of breaches. An incorrect approach that involves transferring all customer data to a temporary, unsecured cloud storage for faster processing would be a significant regulatory and ethical failure. This action directly violates the principles of data security and confidentiality, exposing sensitive customer information to unauthorized access and potential misuse. Such a breach would contravene OJK regulations on information technology risk management and data protection, leading to severe penalties for Bank Central Asia and reputational damage. Another incorrect approach, which is to bypass certain data anonymization steps to expedite the migration, also represents a critical failure. Anonymization is a key security control designed to protect customer identities. Circumventing this process, even with the intention of later anonymizing, creates a window of vulnerability. This disregard for established security protocols demonstrates a lack of due diligence and a failure to uphold the highest standards of data protection required by Indonesian financial regulators. The professional decision-making process for such situations should involve a thorough understanding of Bank Central Asia's internal policies, which are designed to reflect regulatory requirements. When faced with operational pressures, professionals must always prioritize compliance with data privacy laws and ethical obligations. This involves seeking clarification from compliance departments, conducting risk assessments for any proposed shortcuts, and ensuring that all actions are documented and justifiable under the prevailing regulatory framework. The ultimate goal is to safeguard customer data and maintain the integrity of the banking system. Question 16. Stakeholder feedback indicates that a long-standing corporate client of Bank Central Asia, known for its consistent transaction history, has recently engaged in a series of unusually large and complex international transfers that deviate significantly from its typical business profile. As a Bank Central Asia employee privy to this information, what is the most appropriate course of action to uphold regulatory compliance and ethical standards? Option A. Conduct a discrete internal review of the client's transaction history and patterns, and if red flags are identified, escalate the matter through Bank Central Asia's designated compliance channels. Option B. Share the stakeholders' concerns and the client's transaction details with other colleagues in different departments to gather their opinions. Option C. Directly contact the client to inquire about the nature and purpose of these unusual international transfers. Option D. Immediately report the client's transactions to the Indonesian Financial Intelligence Unit, PPAC, based on the stakeholders' feedback alone. The correct answer is D. Immediately report the client's transactions to the Indonesian Financial Intelligence Unit, PPAC, based on the stakeholders' feedback alone. Explanation. This scenario presents a professional challenge for Bank Central Asia employees due to the inherent conflict between client confidentiality and the need to report potential financial misconduct. Navigating this requires a delicate balance, adhering strictly to Bank Central Asia's internal policies and relevant Indonesian banking regulations. The core difficulty lies in identifying the precise threshold at which suspicion of illicit activity overrides the duty of client privacy, ensuring that legitimate business operations are not unduly disrupted while safeguarding the integrity of the financial system. The correct approach involves a diligent and objective assessment of the information provided by the stakeholder, cross-referencing it with known transaction patterns and regulatory red flags. This approach prioritizes adherence to Bank Central Asia's established reporting protocols for suspicious transactions, which are designed to comply with Indonesian Financial Intelligence Unit, PPAC, requirements. By gathering sufficient preliminary evidence and escalating through the designated internal channels, employees uphold their ethical obligations and regulatory duties without making premature accusations or violating client confidentiality unnecessarily. This aligns with the principles of sound corporate governance and anti-money laundering, AML, frameworks mandated by Indonesian law. An incorrect approach would be to dismiss the stakeholders' concerns outright without any investigation. This failure to act on potential red flags could lead to the facilitation of illicit financial activities, violating AML regulations, and potentially exposing Bank Central Asia to significant reputational and legal risks. Another incorrect approach is to directly confront the client with the allegations based solely on the stakeholders' feedback. This breaches client confidentiality, could alert the client to an ongoing investigation, and may lead to the destruction of evidence, thereby hindering any subsequent regulatory or internal inquiry. Finally, an incorrect approach is to share the sensitive information with unauthorized personnel within or outside the bank. This constitutes a breach of confidentiality and could have severe legal and ethical repercussions, undermining trust and operational security. Professionals at Bank Central Asia should employ a structured decision-making process. First, acknowledge and document the stakeholder feedback. Second, conduct a preliminary, discrete review of the client's activity against internal policies and known regulatory indicators. Third, if the preliminary review suggests a potential issue, escalate the matter through the bank's designated compliance or anti-financial crime department, providing all documented information. Fourth, follow the guidance provided by the compliance department, which will determine the appropriate next steps in accordance with Indonesian banking laws and Bank Central Asia's internal procedures. Question 17. During the evaluation of a loan application submitted by a close relative, a Bank Central Asia employee identifies a potential conflict of interest due to their familial relationship. What is the most appropriate course of action for the employee to ensure compliance with Bank Central Asia's ethical guidelines and relevant Indonesian banking regulations? Option A. Inform their direct supervisor and the Bank Central Asia Compliance Department about the familial relationship and request to be recused from the evaluation process. Option B. Delegate the entire loan evaluation process to a junior team member without disclosing the conflict of interest. Option C. Proceed with the evaluation, confident in their ability to remain objective and make a decision solely based on the applicant's financial merits. Option D. Discreetly provide the relative with insights into the bank's lending criteria to help them strengthen their application. The correct answer is C. Proceed with the evaluation, confident in their ability to remain objective and make a decision solely based on the applicant's financial merits. Explanation. This scenario presents a professional challenge because it requires an individual to navigate potential conflicts of interest and ensure compliance with Bank Central Asia's internal policies and relevant Indonesian banking regulations. The core of the challenge lies in maintaining objectivity and integrity when personal relationships might influence professional judgment or create the appearance of impropriety. Careful judgment is required to uphold the bank's reputation and adhere to the principles of good corporate governance. The correct approach involves a transparent disclosure of the relationship to the relevant authority within Bank Central Asia, such as the Compliance Department or the individual's direct supervisor, and recusal from any decision-making processes that could directly or indirectly benefit the relative. This upholds best professional practice by prioritizing ethical conduct and regulatory compliance over personal convenience. Specifically, Indonesian banking regulations, such as those issued by Otoritas Jasa Keuangan (OJK), emphasize the importance of managing conflicts of interest to ensure the soundness and integrity of the banking system. Disclosing the relationship and recusing oneself aligns with the OJK's mandate to promote good corporate governance and prevent practices that could compromise the bank's operations or public trust. An incorrect approach would be to proceed with the evaluation without disclosing the relationship, assuming personal objectivity can be maintained. This fails to address the potential for perceived bias, which can erode trust among colleagues and stakeholders, and violates the spirit, if not the letter, of regulations concerning conflicts of interest. Another incorrect approach is to delegate the evaluation to a subordinate without proper oversight or consultation with compliance. This could lead to a lack of accountability and potentially overlook the conflict of interest, creating a risk for the bank. A third incorrect approach is to subtly influence the evaluation process to favor the relative, even without direct involvement. This constitutes unethical behavior and a breach of professional integrity, potentially leading to severe regulatory penalties for both the individual and Bank Central Asia. Professionals should adopt a decision-making framework that begins with identifying potential conflicts of interest. This involves a proactive assessment of personal relationships and their potential impact on professional duties. Upon identification, the next step is to consult the relevant internal policies of Bank Central Asia and applicable regulations. Transparency and disclosure are paramount. If a conflict exists or appears to exist, the professional should immediately inform their supervisor or the compliance department and seek guidance on the appropriate course of action, which typically involves recusal from the decision-making process. This structured approach ensures that ethical standards and regulatory requirements are met, safeguarding both the individual's professional standing and the bank's integrity. Question 18. Governance review demonstrates that a new, high-potential corporate client is eager to open an account with Bank Central Asia for international trade financing. The relationship manager, under pressure to meet quarterly targets, has submitted a partial set of identification documents for the client, citing the client's urgent need to commence transactions within the week. Compliance Department has flagged that the full beneficial ownership details and source of funds verification are still outstanding, which are mandatory under Bank Central Asia's internal KYC/AML policies and Bank Indonesia regulations. What is the most appropriate course of action for the Bank Central Asia compliance officer? Option A. Request the client to provide a sworn affidavit confirming the legitimacy of their funds and beneficial ownership, and then proceed with account opening based on this affidavit, Option B. Advise the relationship manager to proceed with opening the account and processing initial transactions, while simultaneously expediting the collection of the outstanding due diligence documents in the background. Option C. Authorize the account opening with a condition that the remaining due diligence documents be submitted within 30 days, allowing the client to commence immediate transactions. Option D. Immediately halt the account opening process and formally communicate to the relationship manager and the client that full due diligence, including verification of beneficial ownership and source of funds, must be completed and approved before any account activity can commence. Correct answer is C. Authorize the account opening with a condition that the remaining due diligence documents be submitted within 30 days, allowing the client to commence immediate transactions. Explanation. This scenario presents a professional challenge due to the inherent conflict between a business unit's desire for expediency and the critical need for robust compliance with Bank Central Asia's internal policies and relevant Indonesian banking regulations. The pressure to onboard a new client quickly, especially one with potential for significant business, can lead to overlooking or downplaying compliance requirements, which is a common pitfall in financial institutions. Careful judgment is required to balance business objectives with regulatory obligations and ethical conduct. The correct approach involves a thorough and documented due diligence process, adhering strictly to Bank Central Asia's Know Your Customer (KIC) and anti-money laundering (AML) policies, which are themselves designed to align with Bank Indonesia regulations. This approach is correct because it prioritizes regulatory compliance and risk mitigation. By ensuring all necessary documentation is collected, verified, and assessed for potential red flags, the bank fulfills its legal and ethical obligations to prevent financial crime and maintain the integrity of the financial system. This proactive stance protects Bank Central Asia from regulatory penalties, reputational damage, and potential involvement in illicit activities. An incorrect approach would be to proceed with onboarding the client without completing the full due diligence, citing the urgency of the business opportunity. This is a significant regulatory and ethical failure. It directly violates Bank Central Asia's internal KYC/AML policies, and by extension, the spirit and letter of Bank Indonesia's regulations concerning customer identification and transaction monitoring. This haste increases the risk of onboarding a high-risk client, potentially facilitating money laundering or terrorist financing, leading to severe penalties, reputational damage, and loss of trust from regulators and the public. Another incorrect approach would be to accept a simplified or incomplete set of documents from the client, assuming their reputation is sufficient. This is also a regulatory and ethical failure. While a client's reputation is a factor, it does not absolve the bank of its responsibility to perform its own independent due diligence as mandated by policy and regulation. Relying solely on a client's self-assessment or perceived standing bypasses critical verification steps designed to uncover hidden risks and is a common tactic used by those seeking to obscure illicit activities. A third incorrect approach would be to delegate the full responsibility of due diligence to the business unit without adequate oversight or ensuring they possess the necessary expertise and resources. This is an ethical and operational failure. While business units are responsible for client relationships, compliance functions are specialized and require adherence to strict protocols. Shifting this responsibility without proper controls or training undermines the effectiveness of the bank's compliance framework and can lead to gaps in due diligence, exposing the bank to undue risk. The professional decision-making process for similar situations should involve a clear understanding of the bank's internal policies and the relevant regulatory framework. When faced with pressure to expedite a process, professionals must first confirm that all mandatory compliance steps are understood and achievable within a reasonable, albeit potentially accelerated, timeframe. If there are genuine obstacles to completing due diligence promptly, the correct professional action is to escalate the issue to the compliance department and senior management, clearly articulating the risks associated with proceeding without full compliance, rather than making unilateral decisions that compromise regulatory adherence. Question 19. Performance analysis shows that a Bank Central Asia relationship manager has consistently exceeded their quarterly sales targets for investment products. However, a review of customer feedback and internal audit notes reveals a pattern of clients expressing dissatisfaction with the suitability of the products recommended and a lack of clarity regarding associated risks. The relationship manager's approach appears to prioritize closing deals quickly to meet their personal performance metrics. What is the most appropriate course of action for Bank Central Asia's management to take in this situation? Option A. Acknowledge the strong sales performance and provide additional training on product features, assuming the client feedback is a result of minor misunderstandings. Option B. Immediately reassign the relationship manager to a non-client-facing role and conduct a thorough investigation into their sales practices and client interactions, while also reviewing the suitability of products sold to affected clients. Option C. Focus on reinforcing the importance of meeting sales targets and encourage the relationship manager to continue their successful approach, with a note to be more mindful of client communication in the future. Option D. Issue a formal warning to the relationship manager regarding client feedback, but allow them to continue their current role while closely monitoring their sales activities. The correct answer is B. Immediately reassign the relationship manager to a non-client-facing role and conduct a thorough investigation into their sales practices and client interactions, while also reviewing the suitability of products sold to affected clients. Explanation: this scenario presents a professional challenge for a Bank Central Asia employee due to the inherent conflict between achieving performance targets and adhering to ethical conduct and regulatory compliance. The pressure to meet targets can tempt individuals to overlook or misinterpret guidelines, potentially leading to actions that are detrimental to the bank's reputation, customer trust, and legal standing. Careful judgment is required to balance business objectives with the imperative of responsible banking practices. The correct approach involves prioritizing customer well-being and regulatory adherence over immediate performance gains. This means proactively identifying and addressing potential issues, even if it means a temporary dip in performance metrics. Specifically, it involves escalating concerns through appropriate channels and seeking clarification or guidance when in doubt, rather than making assumptions or taking shortcuts. This aligns with Bank Central Asia's commitment to integrity and customer protection, as well as the broader regulatory expectation for financial institutions to operate with due diligence and transparency. An incorrect approach that involves overlooking customer complaints to meet sales targets demonstrates a failure to uphold ethical standards and potentially violates customer protection regulations. This prioritizes short-term financial gains over the bank's duty of care to its clients, which can lead to significant reputational damage and regulatory penalties. Another incorrect approach, which is to misrepresent product features to clients to secure sales, constitutes fraudulent behavior and a breach of trust. This not only harms the customer, but also exposes Bank Central Asia to severe legal repercussions and loss of public confidence. It directly contravenes principles of fair dealing and transparency expected of financial institutions. A third incorrect approach, which is to ignore internal policy regarding customer suitability for certain products in favor of closing a deal, is a direct violation of internal governance and risk management frameworks. This can lead to customers being placed in unsuitable financial products, resulting in financial losses for them and significant liability for the bank. The professional reasoning process for similar situations should involve a clear understanding of Bank Central Asia's code of conduct, relevant banking regulations, and ethical principles. When faced with a conflict between performance targets and these principles, professionals should: 1. Pause and assess the situation objectively, identifying the potential risks and ethical implications. 2. Consult internal policies and regulatory guidelines to understand the correct procedures. 3. Seek guidance from supervisors or compliance departments if there is any ambiguity or conflict. 4. Prioritize customer interests and regulatory compliance, even if it means not meeting immediate performance targets. 5. Document all actions and decisions taken. Question 20. Quality control measures reveal that a long-standing, high-value client of Bank Central Asia has requested an unusually large and complex international wire transfer to a jurisdiction known for its lax financial oversight. The client has provided a brief, somewhat vague explanation for the transfer's purpose, citing a business investment opportunity. What is the most appropriate course of action for the Bank Central Asia relationship manager handling this account? Option A. Process the wire transfer but flag it for internal review at a later date, assuming the client's explanation is sufficient for now. Option B. Decline the wire transfer outright and inform the client that the bank cannot facilitate such a transaction due to its unusual nature. Option C. Initiate enhanced due diligence procedures. Seek further detailed clarification from the client regarding the purpose and source of funds for the transfer, and assess the associated risks in accordance with Bank Central Asia's AML/CTF policies and relevant Bank Indonesia regulations before proceeding. Option D. Immediately approve the wire transfer as requested, given the client's long-standing relationship and high value to the bank, to maintain customer satisfaction. The correct answer is D. Immediately approve the wire transfer as requested, given the client's long-standing relationship and high value to the bank, to maintain customer satisfaction. Explanation. This scenario presents a professional challenge due to the potential conflict between a client's request and Bank Central Asia's regulatory obligations concerning anti-money laundering (AML) and counter-terrorism financing (CTF). Core of the challenge lies in balancing customer service with the imperative to prevent illicit financial activities. A hasty or uncritical acceptance of the client's request could expose Bank Central Asia to significant legal penalties, reputational damage, and complicity in financial crime. Conversely, an overly rigid or dismissive approach might alienate a legitimate customer. Therefore, careful judgment, informed by regulatory knowledge and ethical considerations, is paramount. The correct approach involves a thorough risk-based assessment of the transaction and the client's profile, coupled with appropriate due diligence and, if necessary, reporting to the relevant authorities. This aligns with Bank Central Asia's commitment to upholding Indonesian financial regulations, specifically those mandated by Bank Indonesia and the Financial Transaction Reports and Analysis Center, (PPAC), regarding AML/CTF. By initiating enhanced due diligence and seeking further clarification, the bank demonstrates adherence to the principle of Know Your Customer (KIC) and the obligation to identify and mitigate suspicious activities. This proactive stance is crucial for maintaining the integrity of the financial system and fulfilling legal responsibilities. An incorrect approach would be to immediately approve the transaction without further investigation. This failure to conduct adequate due diligence directly contravenes AML/CTF regulations, which require financial institutions to implement robust systems for identifying and reporting suspicious transactions. Such an action could be interpreted as negligence or willful blindness, leading to severe regulatory sanctions. Another incorrect approach would be to outright refuse the transaction and sever the relationship without a proper risk assessment or attempt to understand the client's situation. While caution is necessary, an arbitrary refusal without due process can be seen as a failure to provide reasonable customer service and may not be in line with the bank's internal policies for handling potentially unusual, but not necessarily illicit, transactions. A third incorrect approach would be to proceed with the transaction, but fail to document the decision-making process or any subsequent monitoring. This lack of documentation hinders auditability and regulatory oversight, making it impossible to demonstrate compliance if questioned. Professionals should employ a decision-making framework that prioritizes regulatory compliance and ethical conduct. This involves 1. Identifying the potential risk associated with the transaction and client. 2. Consulting relevant internal policies and external regulations, e.g., Bank Indonesia regulations on AML/CTF, PPAC guidelines. 3. Gathering necessary information through enhanced due diligence and client communication. 4. Assessing the gathered information against established risk thresholds. 5. Taking appropriate action based on the assessment, which may include proceeding with the transaction, requesting further information, imposing conditions, or filing a suspicious transaction report (STR). 6. Documenting all steps taken and the rationale behind the decision.